Tilal Oswal Institutional Equities to talk about the market and also what he makes of Amami. Remember, there have been, concerns over there regarding debt reduction plans, but it looks like the company has now, at least gotten started on the right foot. Yesterday, they've sold some stakes. So let's hear out what Gautham thinks could be the way ahead.
It's already been a very tough last 18 months for the mid-cap. If you look at the mid-cap index, it is still, I think, 15-16% below the December 17 levels. I am talking about the Nifty Mid-Cap 100. And more importantly, as we've been highlighting, the polarization in the market just keeps, getting more and more entrenched, be it Nifty or be it Nifty Mid-Cap. In fact, if you look at Nifty top 15 stocks, they are up around 11% in the last 15 odd months or 18 odd months if you replot the index using just 15 Nifty stocks, and the rest 35 are down. Same is the case for Nifty Mid-Cap. Again, if you take the top 15 stock of Nifty Mid-Cap 100, they are up, I think, 8%, whereas the bottom, not bottom specifically, but the rest 85 are down around 21 odd percent. So essentially, it's a case of a market which is grappling with two big underlying things. One is the economic slowdown, more importantly on the consumption side, because the investment has already been, has always been very patchy, led more by public investment. And secondly, whatever earnings growth that we have seen has been very, very narrow. In fact, if you look at FY20 expectations also, 70% of our incremental Nifty earnings for FY20 is expected to come from BFSI. So what is that telling you? That is telling you that ex of BFSI, there's hardly any earnings recovery. And with more and more evidences of slowdown getting out, I think there is more downside risk for the earnings estimate for FY20 compared to what we were thinking 3 months back or 6 months back. So in this sort of an environment, the natural tendency is obviously to flock towards quality, and that's what we witnessed, be it in mid caps or be it in the large caps. And I think that will continue till we get more evidence of some sort of a recovery. I think there are more headwinds actually. Monsoon has not seen any progress so far. And on top of that, the evidences of rural consumption slowdown is there. Auto numbers haven't improved. So it's going to be a bit of a tough grind for the market for the next couple of months.
Your thoughts on IT and your thoughts on Mindtree itself?
Anuj, specific to Mindtree, I think as you pointed out, there will be volatility until this whole open offer event is out of the way, and depending on the news flow, how things pan out. As far as fundamentals are concerned, on IT, we are quite sanguine about it, given the fortunes of other sectors in the market. And IT comes out as a very strong defense right now, given that consumer is a very expensive sector, and pharma, there is no earnings growth. Plus, there are so many headwinds in the pharma. So IT remains the sole defense pack right now with a reasonable valuation. Within that, our preference is more towards tier 1, names like Infosys, names like Tech Mahindra. I think IT will give you 8 to 10% growth. Plus, you have a decent capital returns which is going on, be it through dividend or share buybacks. So IT sits in well in a portfolio as a defensive pack, and we are positive on IT.
I wanted your thoughts on Amami. On one hand, of course, promoters are selling their assets to repay debt, etc. But should that really be a big concern for long-term investors, or would you keep the faith here, considering that at some point when the economy picks up, Amami would be a big beneficiary there?
I tend to agree with the latter part of your statement. I think it's a consumer business. Within Amami, you don't have too much of debt. But what has happened with Amami's FMCG business in the last 3 years, it has got into a spiral of a slowdown led by so many factors, and plus the portfolio is so climate driven, summer portfolio, winter portfolio, and last 2-3 years we have seen disruptions in the climatic conditions also, plus the fact that they have a heavy dependence on wholesale, which has had a set of challenges post the demonetization as well as GST. So they've gone through a lot of rough weather. Even now as we speak, I don't think this quarter is going to see any material improvement. Stock has corrected, obviously. Stock is now at somewhere around 21, 22 times. But I don't see any change in fortunes in a hurry. That will be a function of how the underlying FMCG business shows earnings recovery, and that would be the case for a lot of other FMCG companies as well, barring maybe Lever and Titan, which are in their own different world right now. But broader FMCG space has gone through a consumption slowdown in the last quarter, and I think this quarter's numbers will also be a bit somber.
Well, let's shift focus to a money control exclusive then. More news coming in from the Amami Group. Sources say that the Amami Group is looking to sell controlling stake in Amami paper mills in order to reduce its debt. Money Control's Ashwin Mohan joins us now to fill us in with all those details. Ashwin, over to you.
Good afternoon, guys. So clearly, FMCG conglomerate Amami Limited is in fast-track mode as far as dispelling market concerns regarding its debt at the promoter level is concerned. We've already seen it selling minority stake twice this year in its crown jewel, Amami Limited. And now we're given to understand from market sources that the promoters of Amami Limited have mandated investment bank Nomura to sell a controlling stake in its listed arm, that's Amami Paper Mills Limited. We're given to understand that the process is likely to be launched shortly. Domestic strategic players are likely to express more interest in this particular deal, along with overseas players. Don't expect too much of PE interest. That's what our sources are telling us. Now, the promoters hold almost a 75% stake in Amami Paper Mills Limited. The company has 2 mills in Odisha and Kolkata, and it's a key newsprint manufacturer catering to the publishing houses of Eastern India, and it's also in the capacity consumer packaging board business. So that's one part of the divestment plan that I'm picking up from our sources. The alternate plan, which is also being pursued simultaneously, is on the cement side. Sources are telling me that the Amami Group is also exploring options to divest select cement assets, for which they currently don't have any plans for expansion. And as part of this exercise, I'm given to understand from our sources that they may look at selling some of their newer mining assets, which they acquired in Rajasthan and Telangana. But mind you, the plans for an initial public offer of Amami Cement is intact. So that's a separate plan. And that's, of course, where they're going to raise around 1,000 crores through a proposed IPO. These are just select pure mining assets which they're looking to divest to, of course, bring down the entire debt level. Now, we have written to Amami, and they have responded saying that they are going to take steps continuously over the next 6 to 8 months to resolve the debt at the parent or the promoter level. Nomura has declined to comment. But clearly, this is one particular conglomerate which definitely is in a fast-track mode to divest assets and, of course, erase its debt at the promoter level, which has caused concerns in the recent past around the flagship company, which is Amami Limited.
All right, Ashwin, thanks very much for that. So just pull up both the stocks for now, Amami and Amami Paper, shooting higher. Of course, Amami Limited, the stock is up by about 10-odd%, just a tad bit off of the highs of the day. And Amami Paper has seen a big uptick, although I think on that one, the volumes are pretty low, just about 1,300 stocks that have shares traded.
Yeah, Amami Paper actually, Sumera, is in ASM stage 1, so it's a restriction in terms of trading out there as well. Very few shares for the time being. The stock is moved higher, but just keep in mind that it's in one of the ASM. For the time being, only around 1,400 shares actually have traded. So keep an eye out. The real relief will come on Amami, because if they can sell some other assets, then it will be good news. As it is, the promoter stake has come down from 72% to 62%, now to 52%. And they've said that they want to stay in control of the Amami listed company itself. So if they're selling these other assets, then it's better news for the shareholders of Amami, though the debt in the promoter entity still remains at around 2,200 crores, as the promoter told us yesterday itself, coming down from around 3,300 crores to around 2,200 crores. Well, on that note, we'll slip into a short break. Before we do that, keep an eye out on the markets. We've come off a tad bit from the high point of the day. Hero MotoCorp has slipped a tad bit. I think TCS is the one as well that's seen some sort of selling from the high point. Remember, that's been running along very, very well. But TCS, I think, has come off the top as well. And that's a large weight in there. IndusInd Bank sitting with a cut of around 1% as well. Come back, continue to focus on the markets as well as on various stocks.
तो केमिकल फैक्ट्री में अकड़ो वर्कर आया ई कच्ची लीपण जी वस्तु बनाण मुझो शौक है आइन जा पखाण करी मुझी कला के घर जी भेते ते स्थान डना अने मुके कलाकार बनाई बता आभार।
आपकी वजह से ये सफर शुरू हुआ है। ऐसे करोड़ों लोगों की कोशिशों को मौका देने के लिए थैंक यू।
This budget comes after a decisive mandate for the Modi government. It will set the tone for Prime Minister Modi's economic priorities in his second term. The Sensex has scaled a historic peak of 40,000 ahead of the budget. What market implications will the budget have? Will there be relief for corporate taxpayers? Find out all this and more on CNBC TV 18.
Budget 2019, Modi 2.0, decisive mandate, decisive budget. On CNBC TV 18 and cnbctv18.com, your budget headquarters.
Well, you're tuned in to Halftime Report here on CNBC TV 18. Now, auto dealers across the country, they are struggling, not in terms only of sales, but now, in fact, you have funds as well that are drying up. CNBC TV 18's Alisha Sachdev and Arundhati Ramanan report that worries are mounting since these conditions are not likely to improve anytime soon.
Auto sales have dropped for the 10th month in a row. Passenger vehicle sales were down 20.5% in May, the sharpest decline in 18 years, and commercial vehicle sales have dropped 10.74% year on year. This is pushing dealerships across the country into a corner because inventories are rising and with it, costs. Dealers are not able to get credit as easily as before, and that is a double whammy.
Earlier, the dealer community used to enjoy a lot of unsecured funding, and they used to get access to a lot of funds, which currently, due to a lot of reasons across the last 1 year, I believe, have become more stringent. Across the industry, we've seen a pullback from finance companies, so which has affected the dealer liquidity situation.
Financing definitely is becoming a challenge, and I think NBFCs, banks, both are becoming very risk sensitive. So I think dealers have been asked to give collaterals even for inventory funding.
The pain doesn't end there. Falling real estate prices have meant that banks are reevaluating old collateral, meaning dealers are not getting as much money for their assets as they once were. Things probably won't get easier anytime soon.
So dealership, yes, some risk aversion has happened in last 6 months, yeah. And that may continue for some time. Yeah, so wholesale or dealer finance book, if we are talking about, again, I'm not saying it's a liquidity issue, okay, but it's a more of a banks have become a bit cautious so far as that particular space is concerned.
Rising funding costs and lackluster business has already pushed several dealerships to down shutters. As many as 10 dealerships have gone out of business in the Delhi NCR region alone. Even offers for an extended interest-free loan to fund inventory like the one Maruti's learned to have offered its dealers are not helping much, because since April, inventory levels have crossed 40 days for cars and 60 days for two-wheelers.
For some auto dealers, unsold vehicles have piled up to such an extent that they're looking to buy or rent additional land just to park them. Now, there has been some relief with major car makers like M&M, Maruti Suzuki and Hyundai rejigging production schedules. But until real demand picks up again to enter the fast lane, this is only just a bandage and not a cure. In Mumbai, Alisha Sachdev.
And moving on, a report tabled by the Parliamentary Committee on Black Money highlights that it has no definite answer on the amount of unaccounted wealth generated within and outside